if someone was to give me an airplane, theoretically I could use that airplane to get to Vancouver or Toronto or Mexico quicker. In reality, if I was piloting the plane, it would probably crash on the runway.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today we're talking about why financial and tax plans shouldn't cost extra. Here with Trevor.
Hi there.
And Trevor, probably agrees with me at Inspired Method. You guys have we have flat fees as well for clients, right? So
that's right. Yeah, it makes it very simple for people to get on board because they know what the fees are going to be. It's not a mystery every month, and we've also been able to put things into a system that makes it affordable for a lot of people.
Yeah. Why do we have one fee to develop a website and another fee to make sure the website actually gets seen by somebody?
Right. It doesn't make a lot of sense.
Yeah, exactly. So the quote that we have here is a Michael Gerber quote, author of the E-Myth, and it says, the fatal assumption is if you understand the technical work of a business, you understand the business that does that technical work, and those are two different things. And the stat that we're looking at is 50% of all Canadian small businesses go out of business within 5 years. Now, 29% of these failed entrepreneurs, they will list running out of cash as one of the reasons for their business failing, which makes it the second highest reason for businesses failing. And the story that we have here is business owners, they're running out of cash. They're having this common problem, and they're paying unnecessary amounts of tax because of an inefficient tax strategy.
Right.
So, Trevor, what are the questions you think these business owners need to ask?
Well, the first question is, why do you always say owning a corporation is like owning an airplane?
So I say it's like owning an airplane. I'll explain that. So if someone was to give me an airplane, theoretically I could use that airplane to get to Vancouver or Toronto or Mexico quicker. In reality, if I was piloting the plane, it would probably crash on the runway and we would never leave the airport. And hopefully I would be even worried if we would even live through the experience. Owning a corporation is a lot like that. Just because you have a corporation, it is capable of helping you save additional tax, but just owning it alone does not help you save on the tax. You have to know how to use it.
Right.
And it's the same thing.
Now, how much money does a business have to make to benefit from a tax strategy?
Yeah, so a lot of business owners think, tax planning, that's something that people with millions need to invest in. That's where the government gets you. They get their chunk of change off the middle class more than we like to admit. But the average business owner can really start to benefit from tax planning at about $50,000 in net income. So we're talking small solopreneur businesses even that will benefit from formal tax planning, where the value of the planning itself will exceed the amount that they're paying for the planning if it's done in an efficient manner. So $50,000 of net income, you should be having some tax planning done for sure.
What is a crude test to know if someone is deploying some form of tax planning?
Yeah, so the method I'm going to tell you, it's not quite exact, but it works 9 times out of 10. And if you look at a set of small business financial statements and you see how the owner is getting paid. Now, if that owner is getting paid by all salary or all dividends, 9 times out of 10, they don't have an efficient tax strategy. Not every time, but 9 times out of 10, I would estimate. An efficient tax strategy usually involves paying the owner or owners a combination of salary and dividends. They're getting both salary and dividends from a corporation. In most cases, that will, at least tell you someone has at least considered it. Whether they're doing it right or not in the right levels, that's a different discussion altogether. But if you have all salary or all dividends, probably time for a second opinion.
Now, is it possible to plan for the business without considering the household?
It is, it's not possible to plan for the business efficiently. I looked at a file just the other day, and the accountant came up with an idea that he was going to reduce the corporate taxes by declaring an interest expense in the corporation and report that interest income on the personal return. Okay, great. We got the corporate tax to 0, but we stuck all the income on the personal return at the highest marginal rate. Yikes. So I'm not sure what the purpose behind it is, and even there's more initiatives like that. Things like does the business owner, do they own some real estate? Maybe the real estate makes more sense in the business. Maybe they own vehicles that make more sense in the business. Maybe they have a bunch of cash sitting around personally, in which case, why are they taking cash out of the corporation? So try to do corporate tax planning without, considering, what's being done in the household. You're not going to get the efficient answer. You're going to miss opportunities and even point people in the wrong direction.
Now, do strategies often change from year to year with clients?
Yeah. Sometimes I'll get clients and say, hey, Josh, can't you just do this once and just set it and forget it? That's not how it works. Everything changes. Their household circumstances change. One spouse is working, the other spouse is not working one year. The business income goes up or it goes down, or everything stays the same, and the government changes the rules on you.
Right.
And it changes the rates on you. It changes from year to year. This is not an exercise where you can, do it once. That's why we don't sell it on a la carte basis. This is how much is for a financial plan. This is how much for us to be your accountant on an ongoing basis, and we'll make sure the plan gets done each and every year and updated. Because if we just replicate last year's plans, that's the recipe for disaster. It works, and all of a sudden it doesn't. But by the time you realize it doesn't work, you've paid tens of thousands of dollars in extra tax because you didn't go through the plan every year.
Now at Spurrell and Associates, do you do corporate year ends without tax planning and financial planning?
Yeah, so we actually won't take on that sort of client. So the client that comes to you and they say, hey, we want the year end done. And we don't want any financial planning or tax planning done with it. I don't believe in that sort of work. I view it as I'm selling someone a car without the seatbelt. The seatbelt doesn't cost extra. I just don't think it's the right way to point clients. Maybe you can give them a cheaper price, but you give them a cheaper price and do less work, so they can pay more than what it would cost to do it properly once they consider the additional taxes that we're doing. So we view them as, they're one and the same. The best practices, they should be done together. So we're not going to do anything other than the best practice.
Do you believe the additional taxes outweigh the cost savings on foregoing the planning?
Yeah, so 9 times out of 10, when it comes to that business owner and they're making $50,000 a year or more, they're probably paying more when you consider the extra taxes that they're paying. Mm-hmm. And even if you deduct some of those additional fees that they pay to do it correctly, they're probably paying more. People are just completely underestimating how far a bit of tax planning can go. You might pay a little bit extra to do some tax planning. Say you pay $1,000 or $2,000 extra to do the tax planning in addition to the year end. And now you're saving $5,000, $10,000, $15,000 in tax, provided you have at least a minimal income level. And like I said, it's not as high as people think. It's not millions. It's tens of thousands where the tax planning starts to benefit you.
Do you have set systems to ensure the planning can be done efficiently?
Yeah, so we have protocols that we go through, right? There's a lot of times I think tax planning is super expensive and it seems unattainable for business owners, but we have set systems that these are the questions that we're going to ask the business owner. We know exactly what we're going to do in what we call the initial financial planning meeting and the final financial planning meeting. We're going to ask exactly these questions. So we make sure all the variables and all the missteps that other clients have gone through or missed opportunities, that they're addressed, right? And if ever we find a new scenario that keeps arising, we build it into our process. So we don't have the same client falling into the same pitfall year after year. We ask the same questions, and then it goes out to the team, and the team actually has a set calculation sheet on how they're going to plow through those calculations. They're not inventing it from scratch each and every time. That would be completely inefficient. Although there's a level of customization in every client, there's some things that there's some processes we have to do over and over again. So why not template them and make them as efficient as possible so we can save our time to do the customized work and spend a little bit of time on the customized work.
All right, Josh, so what happens to the cost of planning when firms don't have set processes to plan?
It just skyrockets. I mean, it would not be outrageous for a firm to charge you $10,000 to do some tax planning. And other firms, they charge at $10,000, but the problem is the average small business owner can't save $10,000 each and every year, so they just forego it altogether.
Right.
So we don't have those systems in place. You can't do it at a rate that's affordable and beneficial every single year. So you got to get it to you got to get those systems to a place where the average business owner can benefit for plans every single year. And sometimes people think, well, maybe that's a watered down approach. Maybe that high level planning, custom from scratch, is better. We have experience where clients have come to us from other firms, big four firms, we'll even say, and they paid, thousands and thousands of dollars for tax planning, but they didn't have the systems in place. And, we've seen capital dividends where they were missed for decades, and, a $3.3 million capital dividend circumstance comes to mind. We saved the guy $1.4 million in tax, and guess what? We used the exact same process that we would have used for Bob the plumber on his first day on the job. It was just a template. We knew exactly what questions. That wasn't even a customized solution. It was just one of our key items, routine items that we look for. But because we've systematized it, not only can we do it efficiently, we can actually even do it at a higher level and at a price point that the average business owner can afford and benefit from each and every year, rather than just when they have these one-time life events.
All right, now the $1 million question, Josh. Do you charge extra for tax and financial planning?
We do not. We will not. And I would argue that no, you should not ever. It should be one in the same. Like I said, it's the car without the seatbelt. I don't think we should be selling cars without the seatbelt. I don't think we should be selling year ends without doing financial plans to make sure they're actually paying, minimizing their tax to every degree that's possible for these clients. So we build in the tax planning, we build in the financial planning. We don't want them to pay too much tax, and we don't want to make other financial decisions that completely overwrite all the work that they put into their business. It's included. It's part of the process. I mean, even our year-end meeting, where we're going through the year-end, part of our process in the year-end meeting is to update the plan. We go back through those variables. Yeah. We've systematized even that meeting. We have that year-end meeting. We've already started the next plan. It's built right into that meeting. There's no point in getting them back there another time. We can knock that out in the same meeting. So I think that's what we have here today. Thanks so much for joining us. As always, we look forward to any comments that you have. Please leave them below so we can respond back to you guys and use your comments to guide us on what future topics to tackle in future videos. And as always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds of business.